Hello everyone. Today's lecture we're going to continue chapter number 7 and hopefully we're going to wrap up the whole chapter in the next class, and then we will spend 2 classes to review the final exam and homework number 4. Okay, so now I'm opening these slides in the PowerPoint app. Okay, and then let's get started. So here is one change about our assignment. So if you remember, we usually have the attendance check and homework assigned on Canvas, and then you can submit your answers for unlimited times. But during this semester, our school has some policy change for classes. So my class usually have more A's for students in the final grade, and then the new school policy requires us to have fewer A's in the final grade. They want us to be more strict on the assignments, and so this is a big change. So in terms of our assignments, I have to make some policy changes as well. So the first change is for the attendance check, you can only submit once. This is more strict because the attendance check questions are the easiest ones. So I guess to have this more strict, it won't impact many of you as long as you watch the videos and read the books. You will have high scores anyway. And for homework number 4, instead of submitting it unlimited times, you have 3 times. You have 3 chances to submit. So if you figure out that the first submit you have lower grade, then please work carefully again and then submit the second time. And then you still have a third time to resubmit the answers. So these are the changes in the assignment. Okay, I just want to highlight this so that you all know about the change. All right, so a little bit review about what we have learned in chapter 7 in the previous class. So we learned a very important concept, which is the depreciation. So we said depreciation is the decrease in value of physical properties with the passage of time and use. Okay, so not only use but also the time pass. It will impact the value. It will decrease the value of your property. And that property should be physical property instead of intellectual property. Okay, and that's why we say that whenever you drive off the new car from the dealer's lot, you've already lost its value, right? Because it's used. And the decrease is different at different times. Like in the first year, maybe the decrease is bigger, and then in the second year, it's smaller, and then it's getting smaller and smaller in the future years. Okay, so the first mile you drive, you will lose the most value for the new car. And also equipment loses value as well, and it's very normal and it's usual it's very the thing you usually see in your future projects, also in our problems in the homework and in the final example. We always talk about the equipment value depreciation. And business owners love depreciation because they can always have maximized depreciation to cut the tax. Okay, so depreciation is the part you can take away from your tax, which means you can pay less tax. And tax depreciation is an annual deduction against income, such that the effect of time and use on an asset's value can be reflected in the firm's financial statement. Okay, so it will reduce how much tax you owe. So how to calculate? And we have three methods. But before we learn the methods, we also learn some terminologies, concepts. First, the cost basis, which is the initial cost of acquiring an asset, the purchase price plus sales tax, and also the cost to make it serviceable, like the fee to deliver that asset and the fee to install that equipment. Okay, and book value, the value of asset as shown on the accounting book, right? And the book value represents the amount of money still invested in the property. So because you still invested that money, so that money should be cut out from your taxable income, which will reduce your tax. And this value, the book value, decrease over time because you are losing value of your property, so that book value is decreasing over time. Okay, you get a smaller number invested for that equipment. And the BVK is the book value at the end of year K, because the book value changes over time. So sometimes we are curious about what is the book value at the end of year K. Okay, and BVK, the calculation is very easy to understand. It's just to use the cost basis, the initial cost, minus the depreciation deduction in each year, okay, until the year K, which you're interested in. So it's B minus D1 minus D2 minus D3 until minus DK, okay? Or you can say it's the B minus the sum of the depreciation deduction in all the K years. So BV is different at the end of each year. And the recovery period is the appreciation life of asset in years. It's like how many years the property is depreciable. And it's always given in the problem statement. It's always determined by the government. Okay, that is the recovery period. And market value is the real value, the real price that you can sell your asset in the market, in the open market. And the salvage value is the estimated trade-in or market value of an asset at the end of the useful life in year N. Okay, so don't confuse these two concepts. And annual depreciation deduction is DK, right? Because the deduction is different for every year, so we are interested in what is the deduction in a specific year. So DK, depreciation in year K, always claimed at the end of year. And the cumulative depreciation through year K, which means from year 1 to year K. Okay, so it is the sum of all the depreciation deduction from year 1 until year K. You can also write it as this. Okay. So here are the three methods. Before 1981, we used the straight line method, SL, or we used the declining balance method, which is DB. And after 1986, there is a standard method adopted by the government, which is called MACRS. And under that, we have two systems. One is the very commonly used GDS system, General Depreciation System, and also there's another system we will see in the later slide. Okay, so I have to pause here. Because of the limited internet speed, So I will make this video several parts. So I have to pause here so I can upload the small size of videos quickly onto the internet. Okay. So let's just give it a pause, and I'll see you in the next video.